everyone, welcome back to Market and Sectors. My name is Mike Fairburn. Great to have you here today. Looking forward to a discussion. Want to talk about an indicator today that's interesting. It's out there. It's a sentiment type indicator. It just flipped for the first time really since 2000. It shows an excess. It can show an excess of buying or frothiness in the market relative to just standard stock investor buying. So look forward to getting into that with you real quick here. But it is nice to be with you all today, folks, just ahead of Thanksgiving. Let's go ahead and do a couple of things. By the way, I just want to welcome everybody here to our discussion and just wanted to state welcome to each of you here. Can't see, let's see the top person here that we've got, but hello to you, Austin, Jay Richardson, Life in the Fast Lane, Will Scott, Wrong, Ocean Life, and Truth Will Always Prevail, as well as Riceberg. Folks, any questions, comments you have, definitely throw this in the chat. Looking forward to a discussion today, really on markets and sectors. Clearly, and looking at some of the drivers that we've seen historically within the market, are they going to be intact going forward? Do we see some of the sectors that have outperformed in the S&P 500? Are those positioned to also start back up and go up higher again to keep this market rolling towards year end and beyond? We'll take a look at that for sure. I'm also joining the chat. Great friend of mine, Cameron May. Really appreciate Cam being here. Always so helpful in the chat and very knowledgeable. So, folks, any questions, comments, we'll be able to address those for you in the chat. So, having said that, let's turn over to our disclosures right now, just to get the show on the road. Now, information here is for general information purposes only. The paper money software application is for education purposes only as well. Investing does involve risk, including the loss of principal. A couple of quick notes in here as it relates to futures. Futures and futures options trading services provided by Charles Schwab Futures and Forex LLC. All right, lastly here, past performance is no guarantee of future results or success. And with that, let's turn over and take a look at the markets here, see where we're at. So I'm going to just pull up my... Initially, let's do a quick look at markets. But you can see right here, folks, where are we right now with the S&P 500 index? Just yesterday we did hit that is another all-time high in here. We're kind of getting close to this range, the prior highs. One thing I did want to note is that when you do get up to these levels of prior highs, if you can in fact get above them, now this could go for the markets, this could go for individual stocks, but if you do get above them, you've got to get kind of, like for example, in this case, notice we stayed below that high point, but in prior cases, like for example, this level to this level, we broke higher, right? A lot of times clearing that resistance and taking out where that normal selling pressure has been in the market. I mean, that's what causes these resistance points, right? Sellers within the market coming down. Saw that here, we didn't take out that resistance, but we got it out over here. Now, if we fast forward to the present, notice that we did take out those highs. Now, it was just slightly, but folks, we did take them out. Now, it's not a guarantee, obviously, there's no guarantee in the market, but if you get above that level, you can, in a lot of cases, it's like, it can be construed as a bull flag, particularly if you are able to. I'll switch colors here real quick. If you're able to go sideways in this range through here. So if you go sideways, then that can be a positive. Your hold, in other words, it comes back to what we discussed over here. Are we in fact holding what was resistance and now it is potential support? That's kind of one of the keys that we're going to be focusing in on here, okay, is that point right there. Can we get kind of at least holding that resistance level? It is subtle and it's almost obvious to a degree, but it's a point that needs to be made because I've just seen this over the years, and I think a lot of technicians might look at this. Prices coming up, how do you react around the prior high? If you cannot get and take out that resistance level, if you can't do it, then you actually haven't taken out the resistance, and it can put pressure on the existing trend in terms of will that trend continue or not into the future. Focus up here with me, folks. We did hit a high, an all-time high. That's all else equal a positive, all else equal. By the way, I've lost my numbers over here on the right-hand side again. Sorry about that. It does happen regularly on mine. I'm not sure exactly why, but there you go. So there you have it. So watch this for a sideways move or to the up end. Again, while we're just looking at it minutely, I'm just going to show you, here's seasonality as we've got it. Seasonality does what? The last 5 years on average. I've got to note this on average because it is so important. It is an average move. 5-year average to be exact. We're looking at 5 years. I'll put that in here. 5-year average is seasonality, which is made up of positive years and negative years. It's just on average. If you mesh all those out together, we do tend to go up on a 5, 10, or even 20-year basis towards the end of the year. That's the question here. Will it happen? We're still seeing some interesting signs over here of that. It was interesting today, though. We got off to a bit of a rocky start. We actually had, kind of influencing the market today. We had 4 companies. Let me get into that right there. Report after hours yesterday. Just 4 companies. And I did send a tweet out on it because it doesn't happen every time when this does occur. But here is the tweet right there. Yeah, we had all 4, and all 4 of these right over here just gapped lower. So there was a dip, and that got us kind of off to a bad start today in the markets. But that can influence us. I will say, earnings can be an influence in the market. Notice we don't have any earnings today. Obviously not tomorrow, but SMCI on Friday is the only one I'm showing right now as we focus in specifically on the S&P 500. Just bringing that back to our point on seasonality, earnings still have to remain in check, and will they go up higher towards the end of the year? A lot of times, not in every case, but in a lot of cases, towards the end of the year, there's a lot of buying in what? What do we see a lot of buying in, folks, in terms of a particular group? We're looking at a group of industries over here. It's going to be in the field of, we'll pull it up and just take a look at it right now. We'll go full screen. In a lot of cases, it's going to be right here under your discretionaries. Discretionaries could present an upward, but it's one of the stronger moves. It's a higher high, a higher low, and discretionaries in the form of retail type stocks. Let's go into some of those right now and just pull them up. In fact, we're just going to pop back to this chart. Let's just look at some of these right now. How are some of the retailers doing? Walmart. Think about purchasing towards the end of the year. Although we're shorter by, I want to say 5 days, almost a full week this year. It's really interesting. We're shorter in terms of the time that, customers can go out there and make purchases. It's a shorter buying season this year. But, something tells me they still have to buy anyway, so we'll see what happens. But look at Walmart showing some strength in Walmart there. We've got, with Walmart, let's see, what are another big one? Well, there's Costco, really quite strong. Watch Costco maybe around that big, what do we say? $1,000 mark. It seems like a big number. We're still kind of holding below it. But looking at Costco here, kind of a flag pattern. These can be, if these start to break out and go higher, we could see seasonality supported by the market in terms of a step up too in the S&P 500. A couple more just to look at, broadly speaking, as we look at it into this end to the end of the year here. Home Depot, a big retailer out there, still showing some strength. The one area that we haven't seen some strength in, if I throw out one more, is Target. There's Target right there on a little bit of a dip. Interesting too, I did send this out. I was thinking about you guys when I did it for this class, because I do like to highlight some of these, but I did note down here too. I've got from Schwab.com. In fact, it's just this one right here. Let me just highlight it so you can see it. But this is just expected earnings per share growth next year. I've got a column specifically for that, highlighting 3 of the 4 that we just looked at here. They're all positive. The only one that's not double digit in terms of an estimated, it's just an estimated number based on analyst expectations, but as estimated earnings per share growth next year, that would be Target, right? Target right there, a little bit lower. The other 2 in the double-digit range. If you wanted to reference any of these, take a look at this. I'm going to go ahead and just throw this out into the chat for you. There it is. There is the handle right there. Be sure to follow Cameron May CS as well, but I just thought I'd put the link in there. Let's see. Great to see you, Wiley, David, and Thea, as well as Robert Boucher. Good to have you here. Let's see. Thea says, Michael, I think you have your TOS open on another computer. Then settings revert back. Oh, thank you. I do have a Mac. Thank you. You might have corrected that. I have actually chatted with tech on that and had not run into that yet. I will make sure that's shut out, all of those versions of it. Normally when I put it on sleep, it allows me to sign into these other ones, but good catch. Good catch there. Okay, so I'm getting percentages on my chart there. That might be a fix. Appreciate the feedback there for us. Okay, great. All right. So a couple of different things retail could play a role. And let me tell you this too. You know what else has played a key role actually in lifting markets over a while now? And you don't need me to tell you this. You know it. We go to technology. I'm going to break down a specific, uh, you know, the sector, technology itself. In fact, let's right click and we'll open up that. We'll maximize the cell right there so you can see it. That is information technology. And this has really led the way in the markets as of the last several years. This is a 6-month chart. And what are you seeing here over this time frame? This is where I think some of the risks could be in terms of market strength. You want to keep an eye on this because we've been going flat. In fact, we didn't hit new highs over here. In fact, this level that we saw previously was actually, this is a little while back, maybe 5 months ago. We're still kind of in a sideways range. This is just generally speaking resistance in here. And I just wanted to say that I think that's, something to be mindful of, information technology. If I break down information technology, though, even more minutely to an industry, you guys might know where I'm going with this. What's a big industry within technology? How about NVIDIA? NVIDIA is quite interesting here. Look at NVIDIA in terms of strength. It did have a high, but we just broke a short-term low over here. That looks a lot different than the market, doesn't it? From the S&P 500 index, which is doing something like this. It's up here, right? And it's kind of resting. It actually held the high. This is one of the key points I wanted to mention is that resistance here, we didn't get above it. It was one of those where we came up to resistance just below it and we came back down and we actually made a new low. Now, NVIDIA and others, and I can think of maybe 4 others that were on this, prompted this to look at this today, which is up here on this particular tweet. I just wanted to state, if you look at each one of these, and I'll pull them up, I can pull them up individually here, but if you come over here and just take a look at this right here, they've just begun slipping below their 50-period moving average. Instead of breaking into resistance levels, they have, in fact, dipped a little bit. So they've been leaders, and you want to make sure that you see those leaders when prices are going higher. If you're anticipating kind of broad leadership in the market, what we'd seen, previously. In fact, let's just do this. I'm going to go ahead and I sent out a few tweets thinking of you guys today, but I'm going to go ahead and throw in those 50-period moving averages so you can see it. So just a good reference point. It's kind of a cross between an intermediate term moving average and a longer term moving average. The 50 could be. Let's get us a color over here. There we go. How about bluish? There we go. So let's just pull blue on the chart and I'll show it to you right there. There's the 50 on NVIDIA. We're right at it. Will we bounce? Will we recover from it? Here's another one in the group that's highly related to it, TSM. Below the 50. AVGO, further below the 50. Let's keep going. AMD, way below the 50. Okay? We're just not seeing the leadership that we have. Now, we can bounce with NVIDIA higher, and that could help lead the markets. But that could just be those four key leaders in semiconductors, right? Where a lot of, you get the AI chips in there as well. That could be a guide to what we're going to see in the markets going forward as well. If they really start to break down sharply, remember, when you look at the visualize tab and we go up to a heat map here, and I'll go right into the NASDAQ 100, remember, and the S&P. These are cap weighted, market cap weighted. So, when you look at some of those, what happens to be the biggest one? Well, NVIDIA's pretty big, right? We don't have some of those others, but AVGO is as well, right? AMD, I'm sorry, is right there. This group has really been quite red as of late. So keep watch on it. It can be a market mover. We have begun already to take out those 50-period moving averages. So got to be mindful of it. Okay, just got to be watching. So there's a few things to look at. Retailers, Strength from technology could be another big one to consider as well. So watching those trends around the 50 can be of interest. I think really kind of a main driver could be something like an NVIDIA here. It did take out that new low, but yeah, will we bounce off here? The others haven't yet, but again, this may be in fact the leader. Certainly on a market cap basis for the NASDAQ 100, we can see just the size of the weighting of the market cap by the size of that box that I'd shown you in the heat map there. Okay, so there are a few things to look at right there just to be mindful of as we're watching towards the end of this year and beyond as well. Okay, let's see. So let's go back to this again real quick. And I just wanted to highlight, some of the other areas that you're seeing here. Energy may be holding a support level here. The possibility of a flag, as I mentioned over here on consumer discretionary. Staples, oh, there was the break. That was the possibility of a trend line break. It did break higher. Maybe a longer term flag, let me highlight that a little bit better, but maybe a longer term flag up top here in this group. So these could be interesting too on a kind of sector basis as well. All right. And there are some of the others. Now, healthcare has still been decidedly lower right there. There is some concern about the Trump administration as they're coming in and the way they might look at pharmaceuticals, et cetera, differently. And in fact, I was reading that a few of the big heads within the FDA are already planning on leaving before the new administration comes in. So I don't know what kind of a shakeup we might see there, but that might be in response to that. It's kind of a bigger move, and yeah, just something to be mindful of, something you can see here, big picture as well. So a lot of times, traders will look at strength in the market, break it down into the sectors, make sure the trends are strong in the sectors, and then go with that. All right. So now I want to talk about a sentiment indicator today, and we actually are going to go out a little bit and do a little bit of investigating here. In fact, we're going to start off with just a Google search. And what we're going to do is we're going to type in, this is going to be actually from AOL. I'm just going to type in Michael Saylor, who is actually we're going to just choose the first one I've got up top here. Yeah, there are several links, as you can see, with AOL talking about Michael Saylor and the Buffett. There's a Buffett, the Saylor Buffett ratio is what I wanted to look at today. Now, Michael Saylor, he is the CEO of MicroStrategy, which I think many of you might be familiar with. Let's go ahead and just get back to this, and I'll just show you that chart. I think many of you are. MSTR. And this ratio is actually is using returns from MicroStrategy, okay, is what it's doing. But it's also taking cumulative returns of MicroStrategy and Berkshire Hathaway. So BRK-B, I think it's -B. It's the B shares for sure. So it's looking at those cumulative returns, and what it's doing is it's kind of serving as an indicator of speculative excess in the market. Okay, and what it does specifically, it's a ratio. Looking at those two, it starts with a baseline of 1, and this began June 1st of 1998. Okay, so what I'm going to do is just going back to that Google search. I wanted to point this out to you that. Let's see, let's click on that right now. If you go into these, and I've just taken a number of different Google searches, I've right-clicked and opened them up as well. And you can scroll down into these, and there are a few different stories on them. This particular one, as you can see right here, going right from Google into AOL, and I'm just using Michael Saylor. One of the links that's in there is this one right here, and it's just looking at this ratio. In fact, I'm going to pull up this ratio right now for you all. In fact, let's just do this. I'm going to really kind of zoom in and just kind of highlight this exclusively, okay? Let's see. Well, there it is right there. Yeah. Can I go any bigger? Maybe I can. Can I just go full size and full size? Let's see. We'll go. There we go. That's what I was after right there. How about that? Whoa. Now it took me all the way to the top. I'll just scroll back down and clear that off and try to get there. I was right after that one, and then, okay, it popped it off. So sorry about that, folks. Unfortunately, I'm getting a few ads in here. That might happen sometimes, but let me just pop that back out and see if I can get to it. I might have clicked on something different. Let me just, I think I might have. There we go. Yeah, I did actually. So let me just try that one more time and we're good to go. One more. Okay. So I think that's going to, yeah. Okay. Well, I'll tell you what. It's going to be expanded here for us just from our group. There we go. So here, I got it. Finally, fourth time was the charm. We got it. All right. So this is what the ratio does. And I'm just going to kind of explain it as you look at it right here. Now you'll notice over here on the left-hand side, right up here, there was obviously a big move that we saw up to 23.75. And it got started out of the gates, kind of sharply over here. We did see a little bit of a blip right here, but we are above that baseline of 1. So let me just read a little bit more about it to you. I didn't want to miss anything on it. And so basically the interpretation here is that when you do get above that baseline, okay, it suggests that investors are favoring high risk, high reward assets over the traditional sort of value-based assets that you'd normally see with a Warren Buffett. So this potentially could signal an overvalued market. It's interesting that we got it only a couple of times to this degree. And so it's really kind of spiking up here, but it's leaning more towards excesses in the market, the possibility. Now, obviously, we got really quite high before the dot-com bubble occurred right here, and we began to dip on those cumulative numbers. But this over here was really kind of this is where, remember the meme strategies jumped up over there, these meme stocks? We began to take off over here. So, keep an eye on this. And I showed you how you can kind of look at it. There might be some other sites online that will look at it, kind of specifically at breaking it down for us. But really, it's just looking at overvalued markets. Investors putting more emphasis on maybe those really speculative type investments, something you might see under a MicroStrategy relative to the value-based. And this tends to come at the final stages of a rally. Now, we could be a long ways away from this, but it is interesting that we're just getting it jumping up right now. I would say the meme jump right here, which is kind of a blip on the radar. We immediately reverse back down lower. But, if you look at different cycles and strength, you can see rallies occur. And this is just kind of really quite strong. If that does continue higher, keep a watch on it. But it's the first time since 2000. And keeping an eye also, I would say, on some of the fundamental or economic numbers out there as well could be helpful too. Do we see slowing in personal income? What do we see in terms of jobless claims? Do those start to switch back up? We didn't see that today, but these are things to keep on your radar. Okay, having said that, that is the one I wanted to hit today. And by the way, I wanted to state this too, because it's very important to note that as I showed you, there are a number of different online resources you can go to as you're going through and you're looking for that Saylor Buffett ratio. Okay. But today that one was just specifically from AOL, and it was taken from Acadian Asset Group. And I just wanted to mention that this is, it's from a third party, and Charles Schwab is not affiliated with that third party at all. Just had to note that. Okay. Yep. Key point is to note. All right. So with that, let's continue. All right. So that's in the back of our mind. Let's just see how our other indicators are doing. And so I'm going to go back into a review, a market sector review that we just generally will do. And actually, we talked about it. As we said last go around, we said, hey, we got above the -70 on a McClellan oscillator, which is a gauge off the NYSE, and that was a 2 to 3 week potential rally. Where are we when we began to break up above that high? Let me just draw a line up here and show you right about there. So maybe in the first week or so, there might still be a couple of weeks left, at least according to Cleland himself, is the way he's designed this. So how does that sit? Well, that sits okay with our chart making a high over here, right? And going up. We know that big picture, there might be just some more frothiness in the market, things to be mindful of and different groups to look at. But yeah, we can certainly look at this as well. All right, as being short in the near term, still showing some strength. The McClellan oscillator itself, positive, quite positive this week, actually. Totally reversed that downward sloping line. in terms of the summation index. Okay, we hit a new high in the advanced decline line. Another positive, at least over the short term, maybe short to maybe intermediate term basis, a positive indication there as well. Okay, the SPX EW, new high today. New high today. We do like to see the equal weight. The equal weighted. Remember, that's the SPX, which is the EW. That's what it stands for, equal weighted index. So instead of those market cap weightings that we saw in the, I'll just pull it up again real quick, the Market Watch tab under the heat map, it takes every one of these. Let's say, for example, if we look at these equal weighted and make them, it would make them all the same size box. In other words, we're just getting breadth indication here. New high today, positive, folks. Okay, NYSE composite, new high today. How can we say that's a negative? I mean, it's a new high. You can't, I mean, anytime you can say new high, we've got to say that is we've been making some ground. Now, things can change, but as it stands right now, it is a new high. Remember, this is a broader based index. It's got approximately 2.8 thousand stocks within it. Much bigger than the S&P 500, right? Which we normally use as that gauge. Okay. All right. The oscillators showing strength to the upside. We talked about this last week. We got an Omen spike here. We're going to look at a three-year weekly chart in just a second. One of the key notes, though, is that we were getting higher highs and clearly higher lows in here. We just got another new high today. And oftentimes that you'll see that blip with the Omen telling us that even though we were getting a substantial number of 52-week new lows in the market, we were also getting a higher number of 52-week new highs. The difference is if you're getting breadth in the market, which we were getting, advanced decline line, SPXEW, some strong indications from the NYSE making highs. A lot of times, even though you're getting weakness in a fair number of these companies, you're not getting that repetition of those Omen spikes. Let's go ahead and move this to a 3-year weekly right there, and I'll show it to you. We got no weekly spikes at all. Just like we'd gone back to many, many times and shown you this range over here that was getting a lot of 52-week new lows with new highs, but it represented a fracturing of the market, and the market, when it fractures, it can continue to trail on lower. Okay, so good there. We did get a spike to a high range on the 25th. We were wondering if we would. We did. We cleared our 250 level in terms of new highs in the NYSE, and that has been a good solid correlation with the NYSE line. That's the purple line behind it going higher. If we can get a larger number of spikes, at least above that 250, and preferably making, did we get a new high there? I think we did. We got a new high in all-time highs there. This sets us up better, especially with the trend, for a short term to an intermediate term time frame. And that could mean seasonality towards the end of the year. So it could be another checkpoint for that, right? Just looking at indications for that unfolding. Now, next up here, we've looked at seasonality. You've got it. Let's take a look at the seasonality on the NDX as well while we're at it. Oh, I do have a, let's take this off for now. Fibonacci line on the NDX, but as you can see over here, NDX, this is actually a 10-year basis for the NDX. Year end for the tech-heavy index here, the NASDAQ 100, still showing strength to the end of the year and over here. But we're going to keep an eye on semiconductors, right? The semiconductor group specifically. Let's do this. I want to just hop back over here. That's okay. We don't need that right now. Let's go ahead and take a look. I'm going to narrow these down and take a look at that NDX. See where we're at on the NDX. Okay, so NDX, not a new high. Again, what might be weighing on the NDX? We looked at the heat map. We looked at the market cap for some of those bigger semiconductors that are below their 50-period moving average. I don't think we're anywhere below the 50 on this, collectively on the NDX. But the biggest movers that have got us to where we are on the NDX, they definitely contributed to it. 50? Yeah. They have been in the semiconductor group. And a lot of times you're going to hold these support levels. So let's just see. We're clearly above it here collectively, but see if those weigh it down or not. Now, we'll keep the 50-period moving average on here for a couple other things. Let's see a couple other market indices. Oh, DJI dollar sign. That is the symbol. Strength today. If I had it listed, it would show a new high here on the Dow Jones Industrial Average for the year. In addition, what else do we have? We've got the last one, which is the Russell 2000 Index. Let me go ahead and take these off for now. Both these fib lines, go from there. Okay, Russell, kind of showing some strength outside of a range. I'm going to zoom down here, show you a 5-year weekly. Where are we over here? It's kind of a longer term resistance level. There's resistance, you have to say, through this point and through this point. We're not quite there. A little bit of a shooting star candlestick pattern at the top. You don't like to see too many of those, or a confluence of candlesticks as it's happening in resistance. Okay, the resistance band. So watch this very carefully too. The Russell can be a leading indicator of weakness or strength, but the small caps can strength or weakness to the upside. If you saw a strong, sharp breakout here, oftentimes it can be indications of strength, broadly speaking, for other market caps, mid caps, large caps as well. But of course, the same thing holds to the downside if this were to take out a 50-period moving average as well, for example. All right. How are we doing in our chat? All right, any questions? Let's see what we've got here. Looks like Cam's got us all caught up. Appreciate that, Cam. Let's see, Michael, do you prefer your seasonality prediction script on the chart? That's a good question. I have used that from time to time, and I think it can be helpful. What Thea is referring to is a script, those are not guaranteed for timeliness or accuracy, but that was built. We built it in our class. Oops, sorry, that was our 200 plus font size AOL chart. We've got this over here. This is for this class. I think we talked about it one time in here too. This is the playlist for this class. We've discussed a number of different points. In fact, last week we talked about a proprietary market forecast tool on Thinkorswim. We went through that in detail, kind of as a highlight. I want to look at that actually next before we're done, see how we're doing on that. Another few points. Let me just post this in the chat. If you want to check out any of these, it is there for you to look at. The one that Faye is referring to, though, here is the ThinkScript. And while I'm at it, this will show a subscribe button. If you're not already subscribed, I encourage you to do so. We have over 27,000 subscribers. Would love to have you on board if you find this kind of content useful. And definitely be sure to like today's presentation if you do find it helpful for you. Let's see, ThinkScript, where are we? I got to scroll down some more. Got to load it up. Okay. I just wanted to point that out where that is at. Here is that playlist for it. And we saw it. It's down in one of these here. I'm trying to remember which one it was. I think it was right over here. No, it wasn't. It was a little bit earlier. This is it right here. Projecting seasonal price with trends in just one line. And what it does is it projects that market forecast into the future, and it says, hey, based upon everything we're seeing this year, how does that correlate to the market forecast historically? And it draws that line for you. It is a ThinkScript, but you can find that right there. That is the one that we've got. Yeah, I should have posted that earlier, Thea, because I just put it in the playlist, but into the chat. But that can be helpful if you want to take a look at that. Specifically. Now, I haven't done it for this class, so I didn't look at it today, but I think, you can use that, by the way, on different stocks as well. So it will kind of give you an estimation of where that might be in the future. So short answer, though, no, but I like your comment, and I think it could be helpful for people to look at, if they want to use a tool like that. That discussion gives a full explanation of it as a side note. Okay, well, with that, let's continue on. How is our market forecast doing? The proprietary indicator known as the market forecast, you might have imagined it, but it's actually doing pretty good. We're above 80 now. And what does that mean? If we are above 80, and again, this is just the intermediate term line only that we're looking at here. just the intermediate term line. If we are above that 80, then it doesn't matter the direction of the line. The way some traders will use this, and investors, is that it gives you a bullish indication. In other words, it gives you, it's kind of like it says you can put on bullish positions according to this indicator if you are above the 80 line, regardless of the direction of the line. Okay. If the line is up or down, it doesn't matter over a particular range. It's as long as you're holding that 80, it's giving you that bullish indication. Okay. And you can look at these, and we've seen long stretches of these previously, which can be really interesting to look at. Here is a long stretch where you really held above that 80. Didn't matter the direction of the line. You held above 80, and well, we saw some strength in the market. When you dip below, now if you're below 20, we'll put a red line in for that, just as a reminder from last week's discussion. Again, if you're below 20, it doesn't matter the direction of the line. We were pointing up here, but that's still a negative indication. A negative, I'll put that in quotes. A negative sign right there, even though you're going up. Where it becomes positive is where you begin to cross right above that 20 line. Then it has to be going higher. So anything between 80 and 20, if you're looking for a bullish indication, the line needs to be facing upward. Okay? Look at the 2-year. If you want, go back in and kind of take a look at this historically for yourself and just kind of see what you've got over here. Back testing results don't predict the future, but it is a good way to kind of get an assessment of how things can, operate in a given market. And look, you can look above 80, but specifically look at those areas too, where you bounced off that lower range and there was a reversal. How did the trend of the market go after that reversal? That's something you can look at. So this is meant to be used broadly, although I have seen some traders use it on stocks. I think the next best area, if you were looking at this market forecast, is potentially on a group of, indices, for example. Let's say, for example, there are a number of ETFs out there for an index or a sector, but you could use them on maybe some of these sector grid indices as well. And I don't have these symbols memorized for sure, but you could plug these in and just see how they're doing too on the market forecast, right? So taking it from a top level, the market, and then bringing it down to sectors, and then you could then just assess what companies are doing well too. But definitely starting kind of on a top-down basis, market, sector, seeing how that's working. But I have seen market participants use it in that fashion for sure in terms of the sector. It's a big enough group that you can do it that way as well. Okay, back to the market forecast. There is another tool we got to hit, or another indicator. It's kind of a tool we can look at too. Right over here, it's the volume profile. And you can look at the volume profile. Anything that has a volume attached to it, you can certainly look at. This is over a 1-year basis. Let's go into a shorter term and really just take you down to a 6-month. There is the 3-month. Where is the market? Where are these volume nodes at? Volume, right? Volume and volume of these spikes. If you're above these levels, this is going to anchor support, because remember, it's taking all the volume that we have down here and giving us a price at those volume levels. This is the point of control in red, the highest volume over the past 3 months. But these can be support levels if we're above it. Now, right now, you can see on the ES, we're using this as a example here for the S&P 500. This is the futures contract. We mentioned the earlier, qualifiers on that, or I should say the disclosures on it specifically. But there is a lot of trading in here. Like we said, though, this can be a positive if we can hold this general range and then maybe meander to the upside. This can act as support. Look at where some of this is coming in at. Look at this. There's a lot. Let's just see it for what it is. There's a lot of buying activity coming in right through. Let's highlight that in yellow. And I'm just going to say it right there and down to about there. You see that? that is a substantial amount of volume, and there could be some sideways range. The key thing here is it's sideways, but you've kind of breached a little bit of that resistance level. It's not as apparent, is it, on the ES, but it is more apparent on the SPX. But if this volume can hold there, that could be construed as a positive because it's kind of like what traders might see as a bull flag, right? Okay, or just breaking above the high and holding. Let me redraw that. It's kind of more like this. You break above and then you're just kind of holding that level. And this represents the possibility of a flag pattern right there. Okay, could that be a flag? Well, it's got to break out, right? That's the question. All right, so there's a lot of fun things to look at here. It's really interesting, and this happens too. As we get towards the end of the year, a lot of different areas, obviously, to focus in on as we go through this. I'm going to leave you with just one last thing, and then we're all set on the day. But it's not going to be here. It's going to be over here at the good old dollar index, referred to as the Dixie. There's the dollar. Now, if the dollar can show additional strength to the downside here, that can be a positive here. It can be a positive for markets in general and give us a lift. We were wondering, remember, if the dollar would hold that long-term 50% level that we saw over here. See, that's a monthly chart. My goodness, let's go back to a 5-year. There you go. These long-term weeklies, right there. That's holding their 50% level. We got close to it here. Again, right at that 50% fib, which sometimes if you can't get above the 61.8, sometimes you'll come back down and you might test some of these other levels of fibs. And that could be a driver, a catalyst for higher asset prices, including commodities too. Commodities could, you could see some strength there as well. All right, everybody. Well, that is what I had. And by the way, thank you, Cam. He's posted that in the link, in the chat for us, a link that is to provide feedback for today's session. If you found this session helpful, love to, just let us know in that, or anything, any comments you have. I can guarantee I do go through and I do look at those. Those survey results are sent to me, as well as my manager. So I go through those and take a look at those. But any requests you have or any other indicators, we can certainly look at those. But today, as we kind of summarize what we saw on a short-term to intermediate-term basis, we saw the potential for continued strength along the lines of traditional, on average, seasonality towards the end of the year. The trends show that. We saw breadth across a number of different fronts still showing us strength there. But then we also saw some other areas to be mindful of for potential weakness. The semiconductors, the retailers too, towards the end of the year specifically. And again, there was an indicator that we saw for the first time really breaking above particular level. That was the Sayers-Buffett ratio. I'm going to pull that back up again, and there it is. And you can see us, once again, we summarized this and we just said, hey, this is an indication of investors, kind of going towards those speculative stocks. And it just gives us a sense of more frothiness in the general market. So maybe big picture. Again, this didn't top for quite a bit more, quite a bit higher at a higher level. It didn't top at a higher level for the dot-com bubble, right? It was much higher, 23. We're at 3.49 roughly in this range. But this could be an interesting one, the Sayer-Buffett ratio, to keep an eye on going forward, because it just doesn't happen in such a long time, like roughly 24 years or so. So with that, folks, great being with you. I hope you have a fantastic Thanksgiving. Thank you, Cam, as always, for help in the chat. We'll see you next time, all.